Buffett says to be greedy when others are fearful, and the market doesn't get much more fearful than on Friday. There was virtually no place to hide. The S&P 500 fell over 3%, so did the Dow, dropping by more than 1,000 points, and the Nasdaq dropped by almost 4%. So as Buffett suggested, I got greedy and I bought 100 shares of Adobe at $385 a share. Now that's because I sold a put option with a strike price of $385 and it expired on Friday, and because Adobe was trading below that, I was obligated to buy 100 shares at the strike price. Now, I could have closed out my options position, but instead I decided to take assignment of the shares. So in today's video, I'll do a fundamentals analysis of Adobe and explain why I bought 100 shares and where I think the stock is going in the future. Of course, Adobe is a software company and it provides digital tools to artists all around the world. They almost have like a monopoly on the creative field because a lot of their tools are industry standard, and many of the softwares they provide, you can't really have an alternative. For example, Adobe Substance 3D is a suite of tools that lets you create characters or environments, and it's a complex set of art authoring programs that are used in many different fields and industries, such as in films, you might see it in animation, video games, and these tools not only integrate with other Adobe software, but also with other industry standard tools. Now, ever since the company switched over to a subscription-based business model, their revenues have just exploded. So this is on ROIC's website, and we can see in 2012 and prior, the company was growing in revenue, but not very fast. Starting from 2013, though, you can see it went from 4,000 and then 5,000, 7, 9, 11, 12, 15,000 last year. And between the last 2 quarters of last year and the first 2 quarters of this year, it's bringing in $16 billion in revenue. So definitely a very fast top line growing business. And the net profit does not disappoint as well. Again, kind of lackluster before 2012, 2013, where it's not very stable. But over the last 9 or 10 years, you can see it's been growing at a very fast rate along with the revenue. Net profit margin is very healthy as well. We're talking about double digits, and that's because Adobe has a really cost-effective acquisition model where if you buy their products, it doesn't really cost them a lot more to open up an account for you. And of course, one of the best measurements to know if a company is a good investment or not is the return on invested capital, and Adobe is showing very good numbers there. So for example, last year in 2021, this shows that management took the money that was available for the company to spend, and they made a 24% return on that capital invested. Now, what about future growth potential? According to this Argus report, the 5-year EPS growth forecast is 13% annually. And the author of this report, a CFA named Joseph Bonner, he believes that the EPS earnings per share growth of this company will be 12% over the next 2 years. But that's because the economy might be slowing down, but he expects the long-term growth projection of Adobe to actually be 13%, which is where we got the this number here, the 5-year EPS growth forecast. We can also look at what analysts are projecting for growth on Yahoo Finance. If we go to the Adobe stock and click on analysis, we can scroll down to growth estimates. Analysts are expecting the company to grow at 14% every year over the next 5 years, which is why they're currently giving this a pretty solid buy rating, leaning a little bit towards strong buy at 1.9. In terms of competitive advantage, Morningstar does give Adobe a wide economic moat, which means it's not very likely for other companies to come and steal Adobe's lunch. So Adobe has a history of strong revenue growth as well as earnings per share growth. I think this year, for 2022 fiscal year, they're expected to make about $13 per share. And in an environment where inflation is high, you want to hold companies that have pricing power, and Adobe certainly has that, as you can see from their operating margin here, holding very steady and even went up a little bit last year compared to previous years, which means they can increase the price of their products and services, and customers are still willing to pay that, mainly because there's no other choice. If you're running a company, it's very difficult to switch from the Adobe suite to something else. I've been using Photoshop for over 10 years. I've tried using alternatives, but in a professional setting, when you're working with other people, it's still best practice to use the industry standard. So it's a fast-growing company. It's recession resistant because We had a minor recession in 2020, but as you can see with the top line, Adobe continued to make more and more sales. So, not a lot of companies with this kind of impressive track record. And as an investor, that's always the first thing you look for when you're analyzing a business is does it have pricing power? Is it going to continue growing at a fairly fast rate in the future? And does it have a wide economic moat? And it seems like Adobe does check all the boxes on those things. Now, the only question is at what price is a fair price for Adobe? Because I would say Adobe is a GARP candidate or growth at a reasonable price because you don't expect the stock market to grow at 13-14% a year. But it's reasonable for Adobe to grow their revenue as well as their bottom line by that much. So that means you should pay a higher multiple for Adobe. But of course, there's a limit to how much you should pay. So the only thing left to do now is to just look at the valuation for Adobe because you don't want to overpay for a stock. That's what happened to a lot of people last year in 2021. And when valuations came back down to, let's say, normal, a lot of stocks fell 50 or 60% or even more. So Adobe has been profitable for long enough that we can take a look at it from a PE perspective because that's one of the easiest ways to value a company is by the price to earnings ratio. You can see the EPS trend is very predictable. Basically, over the last couple of years, growing at a very nice pace from almost $8 to $10 to $12.50 last year. And this year, as mentioned, it's expected to make $13.50. And then for the next couple of years, 2023 and 24, even more money. So this is a very fast growth rate, and analysts are expecting this based on the previous performance of Adobe and also their forward guidance, which seems to be pretty strong. Quarter after quarter. So, for a company that is growing this quickly, what kind of PE ratio might you expect? Well, one way to figure that out is to just look at the PE ratio for the stock throughout its history. So, this is the last 10 or so quarters, and the blue line is the trailing 4 quarters, which is basically the PE ratio. And you can see we've pretty much fallen to one of the lowest points in this timeline. But this is only looking at the last couple of years. And because we have the benefit of hindsight, we know that over the last 2 years in 2020 and 2021, there were definitely some unnecessary exuberance in the financial markets. So let's take a look at a longer time period at the price to earnings ratio. And I'll go back to ROIC for that. If we take a look at the average annual PE ratio, this is what the PE ratio was for Adobe throughout the last like 16 or 17 years, since 2006, basically. So prior to 2012, they were still using the old business model. So you had some high teens and maybe even like 20 or 22. Those are sort of the lowest PE ratios that you could find for this. But after 2013, I would say this would be more indicative of the current business model of Adobe. So since 2013, if you look at the PE ratio, it doesn't really fall below 37.9. This was the lowest, and right now we're at 37.3. Looking at the Morningstar report, which goes back to 2012, it is at a price to fair value of just 0.88. And Adobe has never dropped this low. The closest was in 2018, it dropped to 0.89. But if we're valuing Adobe based on like past valuations, right now, according to Morningstar, this is the cheapest the stock has been over the last 10 years after factoring in like all the new earnings and the growth rate and everything else. So maybe this price to fair value could go even lower if the price of Adobe continues to fall. It's hard to know where the bottom is, but I do know that if I buy it now, there's a very good chance that over the next 5 or 10 years, which is the minimum period of time that I would be holding a stock like Adobe, if not longer, then there's a really good chance for the price to fair value to increase over that time period. And you combine that with the expectation of growing revenue and growing earnings per share, and you're looking at a very high return on investment. According to Refinitiv stock reports, we can take a look at the price to sales ratio of Adobe compared to previous years, and we can see it's pretty much at one of the lowest point it has been over the last 5 years. PE ratio, 5-year average is 52. Right now it's 39 or 37, depending on which numbers you use. A forward PE is at one of the lowest point it's been. So this just means you're paying about 28 times next year's earnings. So what are the chances for Adobe to go up in the next 12 months? If I pull up Fundamentals Explorer in IBKR, I can go to analyst ratings for Adobe. We can see that this is a strong buy for analyst, and the average price target is 458. So that's a 20% return on investment from today's price of 380. It's going to be a little bit lower for me because I bought it at 385. But price appreciation is just one way to make money from a stock. Sometimes a stock will pay a dividend, not the case for Adobe because they're trying to pour back into the company as much profit as they can in order to grow the business. But even if there is no dividend yield for a company, you can still make money off of it if you have the shares by writing options. One strategy I can use is to do covered calls. So instead of just holding Adobe passively as an investment, I plan to sell covered calls. So this is the other way of producing value from companies that you hold while you're waiting for the stock to appreciate. And fundamentally, I think it is a strong company. In terms of valuations, it does look cheap relative to its historical metrics. As you probably know, I deposited $100,000 into my brokerage account earlier this month. And since then, I've been using the money to trade options and buy stocks like Adobe. Like, that's what the money is for. I believe that we have hit a bottom in the stock market, and now's the time to be slowly accumulating stocks. And Adobe is one of the first stocks that I bought with the $100,000. I still have a lot of capital left that I have yet to spend, but I'm just going to look more for these opportunities where the stock drops by more than 5% in a single day. And so far, it looks like I've been putting the new capital to good use. Over the last 1 month, my portfolio is up 16.8% compared to the TSX, up 4%. The S&P 500 is up 2%, and the Nasdaq is up about 3%. So as you probably saw on the community channel, I will be streaming live tonight, 6 p.m. Western Time, 9 p.m. Eastern, and it'll probably be for half an hour to an hour. And I'll be talking about real estate, stocks, what strategies I'm currently using in my portfolio to generate this kind of outperformance over the last month. Even if you have a flat market, you can still make money using certain option strategies. Feel free to join, bring any questions you might have about investing or the economy. If you missed the live event, just check back on Monday tomorrow, and I will be uploading it. Anyway, thanks a lot for watching. Good luck with your investments, and I'll talk to you again soon.